Everybody in the financial system is waiting for this one thing. March 2024 will be the biggest month in years, and today we're going to break down exactly why. You came here for the truth, so let me unveil that for you. In today's video, the first thing I want to touch on is bankruptcies. You've seen them. There are always bankruptcies going on, whether it's an individual or a corporation, sometimes even a country. But right now, it's very important to understand how short the timeline is. This is a big problem. Why? Because of the cycle we are currently in. They raised interest rates to a point in which they really can't handle this. Corporates can't handle it, and of course, individuals are heavily burdened. That's why we see the credit card usage at all-time highs, student loans, buy now, pay later, and so on. But the corporations are where the big money is at, the trillions and trillions of dollars that are at stake. The first thing I want to show you is that U.S. bankruptcies jumped 18% in 2023 amid high interest rates. This is, of course, expected. I told you about this simply because it's obvious. When you increase interest rates, you would put that additional burden on everybody. But you need to do that in order to slow down inflation. That was the purpose. And of course, in that whole period of time, you hope that not too much damage is done. And of course, what occurs here from the business perspective is that they have to borrow money. And you would say, why? They've got so much money. Why do they need to borrow money? They're a billion-dollar company. Most of these companies rely on debt exclusively. If they didn't have access to debt, they would not be able to operate. And that's usually what occurs. Their credit line tightens up to the point at which they get choked out. You got to understand this. If you've read the book about Nike, the founding of Nike, well, it's called Shoe Dogs, and they were in a circumstance in which they were making millions and millions and millions of dollars, but the demand was so high that they couldn't produce enough. So they started borrowing money. And they said, okay, even though we're going to make no money whatsoever, no profit whatsoever, eventually we'll get to the point. And we've seen many other companies do this. And it's a very dangerous game because if the money stops coming in or if the debt becomes too expensive or you can't access that debt, the whole thing falls apart. And that's going on right now in 2024. But fast forward just a couple months because we move into March 2024 and there are several things that will be occurring. And I did this just recently, I believe last week. There's a video called 3 Game Changers. What happens here in March 2024 is that we start to see a few of these programs that they've put in place expire, and that's the Federal Reserve. And as a result, the financial system is going to look very different. So right now, there's a lot of these strategies in order to make sure that inflation comes down and that the financial system is able to stand on its 2 feet. But things have certainly changed. Third tallest tower in Los Angeles sells for 45% less than last purchase price as remote work and interest rates drove down office values. Now, this happens to be LA. We could see San Francisco, similar actions taking place. Commercial real estate in most places is a very bad thing to be involved in. That's my opinion. And well, people would say, hey, let's just take it and convert it into residential real estate. We need residential. There's a shortage of residential in a lot of places, maybe not in downtown LA, but we need more residential. So, hey, this is perfect idea. However, as we have seen before, I've covered on the channel, we have seen the fact that you can't convert most of it. Okay, the way that the buildings are designed, imagine this, like, you have your own particular unit. There's only a window at the end. The plumbing is all in the center of the building where the elevators are. You can't just bring plumbing across. Okay, there's no way for that to work. And that's for a lot of buildings. Not every building, but certainly that's the way for it is for a lot of them. It just doesn't work, or the cost doesn't make sense. So it would, cost them the same amount to just demolish it and start from scratch. And so this is the issue. You can't convert most of the buildings. Those buildings are going to be empty for a while, and you have to expect that, okay, 5 years, 10 years down the road, though there would be more businesses, more buildings would be needed, and this would be okay. But there's debt associated with this. Now, maybe we'll get lower interest rates, but that's not the case right now. And we can expect that unless there's some catastrophic event, that interest rates at the end of 2024 would still be higher than where they were. Like they're not going to be at the 0%. So we're going to still have elevated interest rates. And that means the margins of these companies are going to be squeezed. Borrowing costs are still going to be higher. That's what this means, okay? That's the take home here. You've seen bankruptcies before. These were things that have occurred in recent history. This is Rite Aid. They seek bankruptcy protection. Instant Pot and Pyrex parent company files for bankruptcy. Imagine this. Instant Pot, even recipe books made of this thing. Instant Pot, by the way, is not just a pressure cooker. They have like they have a whole product line. And what happened here? Well, filing for bankruptcy. Okay, so just because they do a lot of sales, just because they make a lot of revenue, doesn't mean at the end of the day that they can exist. What about Bird? Those scooters that everybody started going crazy about. Well, even the biggest company that had a valuation, I believe, of something like $1 billion, $2 billion, well, they can go bankrupt too. So we see that everywhere. Now I want to take it to the next step. I want to show you what's going on with the Federal Reserve. What's Jerome Powell up to? What about my favorite, Janet Yellen? Well, I'll discuss that at the end with Yellen, but I want to show you something first. Job openings still outnumber people looking for a job by a large margin. We are going to look at some stats that say things are fine. And we'll look at stats that say things are not fine. So what is the picture? Well, of course, it's usually the case. A lot of gray area. But there's no question. Millions and millions of jobs are open and ready for people to go in. The question is, do people want them? Well, clearly not, as they sit open. Another thing, by the way, is the people that have multiple jobs, that number is at a record high. So we know that there is an issue there clearly because people don't want to necessarily work 2 jobs, 3 jobs, 4 jobs. Usually that's not what people do, but here we go. Fed sees rates staying high. This is hilarious. I read this 3 times, okay? Fed sees rates staying high for some time with cuts eyed in 2024. We're going to cut interest rates and we're going to keep interest rates high. It's like they're not even pretending anymore. Like, what are you talking about? I guess what they're saying is, yeah, they'll do a little bit of cuts, but it's still going to be elevated from where we are. Don't expect 0%. And yeah, I do agree with that. Unless there's some catastrophic event, it's not going to be down to 0% again this year in 2024. Oh, don't worry, they'll get there. But that's the expectation. I don't know. Honestly, at this point, everything is up in the air. But keep that in mind. And then we have this. Logan says the Fed should allow asset runoff as reverse repo dwindles. So shout outs to everybody on my Finance Friday class. We did a whole big download on this. Logan, by the way, is not a voting member of the FOMC at this time. But she makes the case here that they should slow the quantitative tightening that they are currently doing. And right now what's happening is as they're doing the quantitative tightening, they're basically letting their assets, the mortgage-backed securities and the treasury specifically, they are letting that run off. Okay, they're basically just saying as that matures, we'll just let that go. And that's, at any given week, there's a different number there. Let's say it's, 10 billion a week, 20, but whatever the case is, okay? But they want that to slow down. So we're at about 7 trillion, and that's where they're going to leave it, I guess, based on what they're saying here. And the next step there is the reverse repo operations. This is how they can shore up liquidity. So the Federal Reserve does this in order to shore up liquidity. There's apparently too much out there. And so this is what they're trying to do. They're trying to stop inflation. And those who say that the Federal Reserve doesn't create inflation don't understand how this works. Okay? It's an extremely complicated aspect. However, once we know it, then we realize that not only do they create inflation, they acknowledge that. They are actively acknowledging it. And if you understand this, the reverse repos and the whole world, very complicated, convoluted world, then you understand they're trying to mop up all that liquidity, and it's a very difficult task. This is part of it, And what they're saying is, let's slow down on this quantitative tightening. Hold your horses. And then the reverse repos have a chance. Like right now, reverse repos are going down. And in March 2024, it will be at zero if it continues the same pace. The BTFP, which I covered here on this channel before, BTFP is the Bank Term Funding Program. That's the emergency program set up for those failing banks. That's another aspect. Okay, there are three aspects which I covered in the previous video, but you got to know that. That's March 2024. So you have all these things put into place. And now March 2024, that's coming fast, real fast. But the Federal Reserve, they're done talking about a recession. It's not coming up anymore. If you look at the meeting minutes, they don't think a recession is coming. Even Janet Yellen. Yes, that's right. Treasury Secretary Janet Yellen celebrates a soft landing. She said that what we're seeing now is I can describe a soft landing, and my hope is that it will continue. The path of the labor market and the economy of inflation have followed, suggest that we've made good decisions. All right, great. There has been a lot of pessimism about the economy that's really proven unwarranted. A year ago, most forecasters believed that we would fall into a recession. Obviously, that hasn't happened, and that is true. At this time, they have not admitted a recession. The economy, when you look at the jobs numbers, when you look at the U3 unemployment rate, when you look at their measures of inflation, look, if we're going to take their measurements, it doesn't really look that bad, does it? And so they're going to go based on that. Businesses are going to go based on that. And that's where we're at. What can we expect from this? What can we take from all this? Well, we don't know what's going to occur in March. That's important. So those events will be key. But at this time, the general observation that we have is that we are going to go into a shallow or no recession at all. This is them admitting it. Okay, their stats. Okay, we're not going to go recession, soft landing, or none at all. The Federal Reserve begins to cut interest rates. Quantitative tightening starts to slow down, and then eventually they stop and they keep their balance sheet where it is. And we start to get an acceleration of inflation. That, of course, is very good, very bullish for risk assets. Why? You're devaluing the currency. And that happens over and over again. That is 2024 in a nutshell as it stands today. Something happens, banks start collapsing, major war breakout, all bets are off. But that's where it is today. If you appreciate this information and the detail that I cover it here right now, I'm not mincing words. I'm telling you things like this, how I was able to, anyway, I'm able to download this here because of how many cycles I've studied. I've studied way too many at such level of depth that it's unbelievable. And all of that I'm trying to bring to you. My delivery isn't perfect, but I hope you do appreciate the work that I do here. And if you do, hit that thumbs up. I want to thank you for that. And as always, don't forget to come back tomorrow because I'll bring you the latest and greatest information. If you are in a pickle and if you want your money situation resolved, Money Pickle, link in the description, will help you out with that. They have CFPs, they have fiduciaries, and guess what? Totally free. They'll give you a 45-minute call, totally for free. It's at the link below. I've gotten all good responses from the people who have told me so far that they went through and thought it was great. So, link in the description. Check that out, totally free. And I'll see you tomorrow. Take care.